I want to discuss with you adjustments in final accounts. In the previous class, I explained how to do one solution for preparation of final accounts, but there are so many adjustments in the final accounts. And if you know how to deal with the adjustments, then your problem will be correct. So here in this class, I want to explain different adjustments and its treatment. So let us go into the lecture, because understanding the adjustments and its treatment is very important in the final accounts, because intermediate students are going to get this final accounts problem for 20 marks, and BCom first year's first sem students are going to get the final accounts problem for 12 marks. So it is playing a very important role in the final examination, as the weightage is more, and it is very important and part of the student to know the adjustments also. So let us go into the discussion. Here I am going to discuss about few adjustments which actually comes in the examination, and how actually we are going to record, where we are going to write. As I said already in the previous class, all adjustments are going to be recorded 2 times in the final accounts. Final accounts means it is inclusive of 3 accounts. We are going to prepare trading account, profit and loss account, balance sheet. So these 3 accounts are called final accounts. Whenever we prepare final accounts, and in the question they give some items in the trial balance, we are going to record those items in the final accounts anywhere only one time. But adjustments will be given under the trial balance in the question. So each adjustment we are going to record 2 times. Okay, so where we are going to write that 2 times, that is very important. What is the adjustment and what is its treatment in the final accounts, where we are going to write in the final accounts. That is very important to understand, to know before writing or before preparing the final accounts. Okay, so let us learn it. First adjustment is closing stock. So closing stock is a first adjustment, and where we write, students, you have to remember one point. In final accounts we prepare trading account, profit and loss account, balance sheet. So all adjustments one time compulsorily it appears in the balance sheet, except very few. Okay, so all adjustments, most of the adjustments appears one time, that is second time in the balance sheet, and first time it may appear either in trading account or profit and loss account. Second time it appears in the balance sheet. Hope this is clear for everyone. Okay, every adjustment we are going to write 2 times in the final accounts. Second time it appears in the balance sheet compulsorily, most of the adjustments, and first time it appears either in the trading account or in the profit and loss account. So let us discuss each adjustment and its treatment now. First one is closing stock. So closing stock we are going to write in trading account credit side first time. Okay, so we are going to write in trading account credit side one time. Second time we record in the balance sheet on the assets side. Okay, hope this is clear. I will repeat the adjustment treatment. Closing stock, first time we are going to write in trading account credit side. Second time we are going to write in the balance sheet on the asset side. Hope that is clear for everyone. Okay, let us discuss the next adjustment. Next adjustment is outstanding expenses. Outstanding always should be added to the related item. Okay, if this expenditure is related to any particular item, we should add that immediately to that item. Where we record that item, there we should add this outstanding expenses. Okay, so second time it will appear in the balance sheet compulsorily. Outstanding expenses we are going to write on the liability side. Let me explain it once again. Outstanding expenses. Expenses we record in trading account few expenses, in profit and loss account few expenses. Okay, if suppose outstanding expenses name is outstanding rent. So outstanding rent means it is nothing but outstanding office rent. So rent we record in the profit and loss account debit side. So this outstanding rent we should add to that rent. Okay, one time in the profit and loss account. Debit side we record, we should add to the rent. Okay, suppose outstanding expenses name is rent. So rent already appears in the profit and loss account debit side, we record there, and this outstanding rent we have to add to that rent in profit and loss account debit side. Okay, that is first time. Second time we should show in the balance sheet on liabilities side. Hope this is clear. And if suppose this outstanding expenses is, for example, outstanding wages, so wages we record in trading account debit side. So these outstanding wages we should add to that wages. Okay, we should add to that wages in trading account debit side one time. Second time we should record in the balance sheet on the liabilities side. This is a treatment of outstanding expenses. Hope this is clear for everyone. Note that point. Next one is prepaid expenses. Prepaid, paid in advance. Okay, prepaid, always we should deduct from the relevant expenditure. Wherever we record the relevant expenditure, there we should deduct this prepaid expenditure. For example, expenditure name is prepaid postage charges. Prepaid postage charges. So postage charges we have to record in profit and loss account debit side. These prepaid postage charges we deduct from those postage charges which we recorded in profit and loss account debit side. Prepaid postage charges we should deduct from postage charges in profit and loss account debit side. Second time we should record in the balance sheet on assets side. Okay, so hope this is clear for everyone. And next one is depreciation. Depreciation, definitely you will get either one or two adjustments related to depreciation, outstanding expenses, prepaid expenses. Closing stock is compulsory adjustment in the final accounts. Okay, so let us discuss depreciation. If you observe the depreciation in adjustments, one time we should record in profit and loss account debit side as to depreciation on, if it is on machinery, on machinery, to depreciation on machinery. Okay, you calculate it there and you record in the amount column. Second time you should record in the balance sheet on asset side, you should deduct from the relevant asset. Okay, if depreciation is related to machinery, you deduct from machinery under assets in the balance sheet. Machinery you record. Okay, under that you write minus depreciation and deduct that and put the amount in the amount column. Hope this is clear. So next one is, after depreciation, the next one is bad debts. Bad debts means the debt which actually the business is unable to receive. Okay, so they declared it as bad, they are not going to receive it, so it is loss actually. So bad debts, provision for bad debts, provision for discount on debtors, these three adjustments are related to debtors ma. So you can see bad debts, provision for bad debts and provision for discount on debtors. These three are related to debtors. So they have link with the debtors. What you have to do, you have to, whenever you write debtors in the balance sheet, you should deduct these three if it is there in the adjustments. Okay, second time whenever we record in the balance sheet, you should deduct from debtors because these three are related to debtors. And next, first time where you should write profit and loss account debit side. Okay, so treatment of these three adjustments is same. One time we record in profit and loss account debit side, second time we record in the balance sheet and we deduct from debtors under assets. Treatment of these three adjustments is same. You can see here provision for bad debts and provision for discount on debtors. So where we write these adjustments place is same. Okay, two places are same. First time we record in profit and loss account debit side. Okay, we write two bad debts if it is bad debts. If it is provision for bad debts, we write two provision for bad debts. If it is provision for discount on debtors, we write two provision for discount on debtors. One time in profit and loss account debit side. Second time we record in the balance sheet under assets. Okay, from debtors. We are going to deduct from debtors. If it is bad debts, we deduct under debtors. We write debtors, under that minus bad debts. If it is provision for bad debts, we write minus provision for bad debts. If it is provision for discount on debtors, we write minus provision for discount on debtors. Okay, this is a treatment of this adjustment. Next, let us go to next one. That is provision for discount on creditors. So, if any provision for discount on creditors is there in adjustments, how to deal with the adjustment? You know that we are going to write two times. One time we record in profit and loss account credit side. Okay, we write in profit and loss account credit side by provision for discount on creditors. Second time we are going to record in the balance sheet on liability side. So, we deduct from creditors. Okay, so second time we deduct from creditors under liabilities in the balance sheet. Okay, hope this is clear, and I will repeat this once. Okay, provision for discount on creditors, I will repeat this once again. So that is profit and loss account credit side we record one time by provision for discount on creditors, and we put the amount in the amount column. That is first time. Okay, for the first time we are going to write in profit and loss account credit side by provision for discount on creditors. Okay, first time we record there, and second time we record in the balance sheet on liabilities side, but we deduct from creditors. We deduct this item from creditors. Okay, so let us move to the next one. Next one is accrued income or outstanding income. Next one is accrued income or outstanding income. Okay, accrued or outstanding, both are same. Accrued and outstanding, both actually we are going to add. So accrued income or outstanding income, always we should add to the relevant income. Okay, so where we write incomes in the final accounts? Profit and loss account credit side. So if suppose this accrued income is accrued commission. Okay, income name is commission, so that is accrued commission. If we have that adjustment in the final accounts, we should go for the first time into the profit and loss account credit side, because that is income, and we should see where we have commission. Under the commission we should add, okay, plus accrued commission, we should record in that way. So always accrued income should be added to the relevant income in profit and loss account credit side. If for example accrued income is accrued commission, then go to profit and loss account credit side and add this accrued commission to the commission first time. Second time we are going to balance sheet, we record in the balance sheet. In the balance sheet we are going to write on the assets side. Okay, accrued income, outstanding incomes we are going to write in the balance sheet on asset side second time. Hope this is clear. Let us move to next one. Next one is income received in advance. So whenever received in advance is given, you should deduct from the relevant income. Where we write incomes? In the profit and loss account credit side. You go to that profit and loss account credit side and deduct from the relevant income. Okay, income received in advance, you deduct from the relevant income. Suppose our income name is commission. Okay, you go to profit and loss account credit side. Okay, you see commission there, and under that you write minus commission received in advance. Okay, you deduct that and you put the remaining amount in the amount column. That is the treatment, okay, for the first time. Second time you should go to balance sheet and record on liability side. Okay, write income received in advance, otherwise commission received in advance. If it is commission, income name is commission, you write commission received in advance in the balance sheet on liability side second time. Hope this is clear. Let us move to next one. That is interest on drawings. If you see this adjustment in the final accounts, okay, so you have to write first time in the profit and loss account credit side. You should write like this: by interest on drawings. If amount is given, record amount in the amount column. If any percentage is given, you calculate on drawings that percentage, you will get it. Okay, so by interest on drawings. And next time, second time, you should go to balance sheet and you go to liability side, and interest on drawings you should deduct from capital. Drawings, interest on drawings, both we are going to deduct from capital. Remember, here we have interest on drawings, so you should deduct from capital. Okay, second time. Next one, interest on capital. Interest on capital, first time you are going to record in profit and loss account debit side. you are going to write in profit and loss account debit side to interest on capital. If amount is given, record the amount. If any percentage is given, calculate that percentage on capital value and record that in the amount column. Second time you are going to record in the balance sheet on liabilities side, you are going to add interest on capital, you are going to add to capital. Remember that. Interest on drawings we should deduct, interest on capital we should add. Okay, so next one, goods destroyed by fire. If you find this kind of adjustment, goods destroyed by fire, sometimes goods destroyed by fire we record 2 times, sometimes 3 times. When we record 2 times, when we record 3 times, you should know that. Okay, so here if they are giving the adjustment like this, how I will show you. I will show that adjustment, okay, so that you will understand in a clear way. So they have given like this, goods or stock, okay, both are same. Goods destroyed by fire, rupees 10,000. Insurance claim received rupees 6,000. Okay, if the adjustment is given like this, goods destroyed by fire, okay, how much goods destroyed by fire? That is 10,000 students. Goods destroyed by fire is 10,000. Okay, and next, insurance claim received is how much? Insurance claim received, that is 6,000 rupees. Okay, so insurance claim received is how much? It is 6,000 rupees. So total goods destroyed by fire is 10,000, and insurance claim how much they are receiving? They are receiving 6,000 rupees. Okay, total loss is 10,000. So total loss we should record in trading account credit side. So that is 10,000. How to write it? By goods destroyed by fire 10,000 we record in trading account credit side. And next, 10,000 is a total loss and 6,000 insurance claim we received. So how much still we have loss? 4,000. Okay, so 6,000 because of that loss, goods destroyed by fire, our insurance company have given some money to the businessman, that is 6,000 rupees. But 10,000 is a loss. So after receiving 6,000, still how much loss we have? 4,000. So that 4,000, whatever loss we have still after receiving insurance claim, that will be recorded in profit and loss account debit side. You should write like this: 2 goods destroyed by fire, 4,000. Okay, second time finished. Third time you should record in the balance sheet on asset side. You should write like this: insurance claim. What is the insurance claim amount? 6,000. Okay, insurance claim on the asset side 6,000. In this way we should write. I'll repeat this once again. Total goods destroyed by fire in the business is 10,000. So total loss is 10,000. We record first time in trading account credit side. We write like this: by goods destroyed by fire 10,000. Next, still how much loss we have after receiving insurance claim? 6,000, 4,000 loss is there. That we record in profit and loss account debit side. Okay, what we write? 2 goods destroyed by fire, 4,000 rupees. And next, third time we record in the balance sheet. Okay, asset side. What we write? Insurance claim. How much? 6,000. That's all. 3 times we are going to record this whenever insurance claim is given. Okay. And next, if suppose they have given adjustments like this, I will show how actually they give. Okay. So next, suppose they have given like this: Goods destroyed by fire is 10,000. Insurance claim also is 10,000. Okay. So goods destroyed by fire is 10,000 and insurance claim also is 10,000. Now you tell me total loss is what? 10,000. But insurance claim how much they received? 10,000. Okay. There is no net loss now. So total loss always we record in trading account credit side. How? By writing by goods destroyed by fire 10,000. Do we have any loss still? We don't have, because total loss we received from the insurance company as insurance claim. We don't have any loss. 10,000 minus 10,000 0. So don't record in profit and loss account. Okay. So we will go to balance sheet second time and we record in the balance sheet on asset side insurance claim 10,000 rupees. So in this case we are recording only 2 times, students. You remember this point. Okay, here we are recording only 2 times. We are not recording 3 times. Okay, so 2 times we are recording. And next, third case. You see third case, how we are going to write it now. I will show that also. So, goods destroyed by fire is 10,000. Okay, so they are not receiving any insurance claim. They are not receiving any insurance claim. Goods destroyed by fire 10,000 is given. Then total loss is 10,000. Okay, no insurance claim. Then how we are going to deal with that? Total loss always we record in trading account credit side. So you should write by goods destroyed by fire 10,000. Second time, still how much loss we have? 10,000, no insurance claim. Okay, our loss is 10,000 only. So record that in profit and loss account debit side. 2 goods destroyed by fire 10,000. That's all. Do we have insurance claim here? No. So don't record in the balance sheet on asset side because insurance claim is not there. So in second case and third case we are recording only 2 times but in different places. Okay, remember this. Okay, so hope you all understood how to deal with the goods destroyed by fire. Okay, let us move to next one. Goods or stock, both are same, students. Next, goods used for personal use. So whenever any goods are used for personal purpose, then we can call it as drawings. Okay, so if that is given in adjustments, always what we have to do, we have to go to trading account. We should deduct this goods used for personal use from purchases. Okay, we should deduct from purchases first time. Okay, we write in trading account 2 purchases. From that we should deduct this. Suppose purchase returns also are given. 2 purchases, under that minus purchase returns, and whatever amount we get, from that you deduct this goods used for personal use. Okay, one time finished. Second time we should go to balance sheet because these are drawings. Okay, so go to balance sheet and you deduct this amount goods used for personal use from capital, because always drawings we are going to deduct from capital. This is a treatment for this. Hope this is clear for everyone, and I will show one more also. This one, stock distributed as free samples. I forgot to discuss this. Stock distributed as free samples. Whenever any stock is distributed as free samples, okay, how to deal with that in the final accounts? So first you have to go to trading account. Okay, you deduct this from purchases. First time you deduct from purchases. Second time go to profit and loss account and write on the debit side of profit and loss account 2 goods distributed or stock distributed as free samples. Okay, so you don't record in the balance sheet. So this is one case where we are not going to write second time in the balance sheet. Okay, so I will repeat that again. Stock distributed as free samples. First you go to trading account and deduct from purchases. Okay, first time. And second time go to profit and loss account, write on debit side 2 stock distributed as free samples and put the amount in the amount column. Don't write in the balance sheet this adjustment. Remaining all we are recording second time in the balance sheet, but this one we are not going to write. I already said in the beginning of the class, most of the items second time we record in the balance sheet except very few adjustments. Okay, so this is one of the adjustment where we are not going to record. that in the balance sheet second time. Hope this is clear, students. Okay, in case of any doubts in adjustments, you can mention in the comment section so that I will reply. Okay, so intermediate exams are going to approach soon, and hope everyone will understand this adjustment and are going to record in the final accounts in the final examination correctly. Okay, so if you understand the class, like the video, share it and subscribe the channel. Thank you.